I'm going to be telling you 6 things that I am doing in this last month of 2022 to prepare my finances for 2023. Hi, everyone, and welcome to this week's episode of Don't Go Broke Trying. I am your host, Reni. And on this podcast, if this is maybe your first time listening, we teach people how to not go broke trying to live their best life. In this episode, I'm going to be telling you how I'm preparing my finances for the next year. So are we ready? Are we ready to get into this? This is our very last episode of the season as well. So season 1 is coming to an end and season 2 will begin next year. In other news, we also have a new home for Don't Go Broke Trying. So right now I'm posting episodes on my personal YouTube channel, Reni, but for 2023, big things are loading. So we're actually going to start a new platform for Don't Go Broke Trying. We have a new home, and that is going to be the Don't Go Broke Trying YouTube channel. So you can go over, I'll leave the link in the description box, and you can go and subscribe to the Don't Go Broke Trying YouTube channel. Today, I'm going to be telling you 6 things that I am doing in this last month of 2022 to prepare my finances for 2023. First thing is I am going to review all of 2022 and see what went well and what went wrong. And I'd always encourage people to do this. Like, it's one thing to set goals and achieve goals, but like, are you looking to see what went well and what went wrong? Because oftentimes things will go wrong and we just overlook them. But if we never actually take the time to review them, then we can't improve for next year. So one thing that I'm going to be doing is I'm going to look back through my bank statements from the past 3 months and see, was I able to stick to my budget? Did I invest as I wanted to? Did I save as much as I wanted to? Did I enjoy my life as much as I wanted to? These are the questions that I always like to ask myself. And also, I like to ask myself if I stuck to the regular reviews of my budget that I plan to do. Because a lot of times we make our budget, maybe we don't stick to our budget, but then are we reviewing our budget month over month or week over week to make the changes that will allow us to actually stick to our budget? A lot of times we create budgets that are unrealistic for us, and that defeats the purpose of budgeting. So my suggestion to all of you is to do regular reviews of your budget and go back, look at your budgets from the past 3 months. Have you been able to stick to it? If not, let's make something that is a bit more realistic so that we are not feeling bad about budgeting, but instead we're making something that we can actually stick to. If groceries were $300 a month that you were spending in January, but by December, you say it's $500 a month. Let's analyze that, okay? Is it that inflation is inflation in, or is it that there is just bad spending on our part? It could be either one. So I want you to actually do a deep dive into your spending habits over the past 3 months or even the whole year if you can. Another thing, just to end this off, is I want you to look at what went well. As I said, oftentimes we look at the bad and it gets us discouraged. We don't even want to talk about finances anymore, but what went well with our finances? Did you set a goal? For example, I set a goal to invest $20,000 this year, but I invested closer to $25,000 this year. So I set a goal. I was able to achieve it. So I should look at, okay, how was I able to achieve it? What are the things that I did that allowed me to achieve it? And then how can I replicate this for next year? So those are some questions that I want you to ask yourself. The second thing that I'm going to be doing to prepare my finances for 2023 is I'm going to analyze my contribution room. Now, this one is for the Canadians here, but I'm sure there's an equivalent in your country, depending on what country you are in. But I'm going to analyze my contribution room in my investing accounts. So if I want to invest $30,000 this year, let me look at all of the different investing accounts that I have available and see how I can divide these things. So if you're in Canada, we have these things called registered accounts. And these are essentially accounts that the government gives us that allows us to invest within a tax shelter or actually, within a tax shelter. So you can have tax-free options or tax-deferred options. So what I suggest is that you try to invest in those options first before you go and invest in in a non-registered account, which means you will have to pay taxes on all your gains. So what you do is you go onto the CRA website, the Canada Revenue Agency website, and you're going to see how much money do I have in my tax-free savings account, how much money do I have in my registered retirement savings plan, and if you have kids, how much money do I have to invest in my RESP. If I look at the TFSA, every year the government gives us $6,500. That's been the typical on average that we can invest through our TFSA. So I'm going to say, okay, I'm going to maximize my entire TFSA. Then I'm going to look at my RRSP and say, okay, maybe they're giving me $18,000 this year. I'm going to go and max that out. And basically, you want to analyze how much contribution room that you have in each account so that you are investing in the most tax efficient way possible. Again, nobody wants to pay taxes. The rich people are avoiding taxes by all costs. So us as the regular people, we should be trying to do the same, okay? And then if you have exhausted all of those options, your TFSA, your RRSP, your RESP, then I want you to look into the non-registered investing accounts and maybe even consult a financial advisor to see what would be the most tax efficient way to go about organizing your investments for next year. And also, one thing I want to note is that next year, if you're Canadian, there's a first-time home savers account that is launching. So if you do not have a home and you want to save towards a home, they're launching this thing, which is basically a hybrid between a tax-free savings account and an RRSP. So definitely look into that. They're estimating that the contribution room will be about $8,000. So before you go into the non-registered accounts, definitely look at these registered options that they are releasing. Okay, let's go on to number 3. So number 3 would be to analyze your savings accounts and pick the highest interest rate option. So if you didn't know, there are these accounts called the high interest savings accounts. So typically we have savings accounts, but then there is this thing called the high interest savings account. And the reason that they call it that is because they have a slightly higher interest rate than a regular savings account. So if you are saving for a goal, say you're saving to purchase a house, instead of saving it in a regular savings account, you ideally want to save it in this high interest savings account so you can get the most amount of interest on it as possible. But a lot of people have these accounts already. If you've been listening to me for a while, you definitely have these accounts. However, I want you to analyze these accounts that you have. There are lots of banks in Canada. There's TD, there's EQ Bank, there's Tangerine, there's Simply. There's so many banks, but their interest rates differ month to month, week to week even. So I want you to look at the account that you have. Do you currently have your money in the account that is giving you the highest interest rate possible? If not, what are you doing? What are you doing? EQ Bank actually typically has one of the highest interest rates around, and you can use my affiliate code if you want. I'll leave it in the description box. And if you don't want to do all the work of looking at the different savings accounts, you can actually watch my video, which compares the different accounts and tells you which one has the highest interest rate possible. The bank is going to loan your money out at a incredibly high interest rate. You've seen the mortgage rates right now. So ideally, you want to make as much money off of them as possible. Number 4 is that I want you to do a deep dive into your debt. So look at all your debt that you have. Do you even have debt? First of all, because some of us don't. But if you're like me and you have a bit of debt, like my mortgage, I want you to look into all of the debt that you have. Do you have a mortgage? Do you have student loans? Do you have credit cards? Do you have a line of credit? Ask yourself what debt you have, and I want you to put it out on the table and write down all the debt that you have. One thing that often happens is that we have so much debt, we get overwhelmed by it, and then we just let it go to the wayside. But the more logical thing to do would actually be to confront our debt head on and act like it's there instead of acting like it doesn't exist, because it is there and it will continue to grow if we don't tackle it head on. So of course, not all debt needs to be paid off immediately. For example, my mortgage, I am paying that off anytime soon. But some debt does need to be paid off, like credit cards, for example, or maybe your student loans. So look at your debt and analyze what the interest rate is on each piece of debt, okay? So if your credit card is 19.9%, then that is something you need to pay off immediately because it's compounding very regularly and it can get overwhelming if you don't pay it off soon. So again, don't act like your debt is not there. Let's make a tangible plan in order to pay off all the debt that we currently have. I will do a full video in 2023 about how to actually tackle your debt. But if you listen to our episode with Natalie, she walked through how she paid off over $70,000 in debt and she used the snowball method. So if you want to listen to that, I will also link it in the show notes as well. And another thing to note with that is that if you have a mortgage, for example, the Bank of Canada is increasing their interest rates so often. Like my mortgage, I think it went from 2% to 5% interest over this year. So they're continuously increasing it, and it's it's expected that they will continue to increase the prime rate until God knows when. So I want you to forecast this when you're preparing for 2023 as well. Like, if your mortgage continues to increase and increase and increase, can you afford to keep this mortgage? Do you need to make more money in order to keep this mortgage? Do you need to have a side hustle to make these mortgages? These are the questions that we need to be asking ourselves. The fifth thing that I'm going to be doing for 2023 is I'm going to be looking for tax deductions. So as I said earlier, ain't nobody want to pay taxes. I don't want to pay taxes, but it's a part of life. And now that I am what would be considered a high earner, I'm making six figures now, it's even more important to be looking for any tax deductions that we can find. And I don't know about you, but I find tax season extremely overwhelming. It stresses me out. Like I'm not here for it at all. But when I start to prepare way in advance, so 2022 is coming to an end, I can prepare all my tax information and stuff like that right now. So in 2023, when it's tax season, all I have to do is send it over to my accountant and it's all done. But if I leave it for next year, I just know it's going to stress me out. I used to work in wealth management. And when I was working in wealth management, this November, December was a time where they were telling all the rich people that, okay, this is a time for philanthropy. So if you go to a church and you want to give an extra offering, it actually reduces your taxable income at year end. So any philanthropy you can donate to any charitable organization. If they give you a tax receipt, that can reduce your taxable income. A lot of people don't know this, so hopefully this helps you. And also just look for tax credits, because here in Canada and in a lot of other countries, there are lots of tax credits that are available for us. The sixth thing and the final thing that I'm going to be mentioning today and how I'm going to be preparing my finances for 2023 is I am going to be goal setting. If you've watched me for some time, listened to me for some time, you know that I am huge on goal setting. I have a vision board. I have tangible goals for like pretty much every aspect of my life, and my finances are no different. So I want you to ask yourself these questions. How much do you want to make in 2023? Is it $100,000? Is it $150,000? Is it $50,000? Is it $200,000? What is your goal? I want you to ask yourself these questions. How much do you want to make in 2023? And of course, you want to set tangible actions that will help you get to that point. For example, if I look at myself, I'm an entrepreneur now. So if I want to make $150,000 next year, I know that 150 divided by 12 is $12,500. So each month I need to make $12,500. And to do that, I need to do 2 brand deals or 3 brand deals to get me there. So these are the questions, again, that you need to be asking yourself. If you are in a 9 to 5, obviously it's a little different, but say you make $80,000 at your work and your goal is to make $100,000 this year. What side hustles can you do in order to make up that extra $20,000? Or can you get a new job that will pay you $100,000? Or can you ask for a raise at your current company? These are the questions. The next thing is, how much do you want to save? So there are lots of types of savings, but ideally you want to save for an emergency fund and then all your other goals. So do you have a house that you want to save for? Do you have a car that you want to save for? Do you have a vacation that you want to save for? Do you have a birthday party that you want to throw that you want to save for? Ask yourself all of these questions and then create a plan in order to get there. And I will be releasing my savings plans very shortly. You can use the link in the description to sign up for them as well, so you will be the first to get them. But I want you to save for your goals. But again, it's not just one thing to say, I want to save $10,000 this year. I want you to say how much each month or bi-weekly do I need to save in order to reach these goals. That's the most important part. And also the accounts. Personally, I like to have an account for each and every goal that I have. So I have an account for my emergency fund. I have an account for my house fund. I have an account for my car fund. I have an account for my trip fund, all of these things. So so my suggestion would be to open separate bank accounts or separate accounts within the same account so that you can do so. And you can do this through EQ Bank. Again, I will leave the link in the description box below. Another thing is for your goals. How many vacations do you want to go on next year? We want a soft life, right? Not a broke life. So although you want to go on all these vacations, you still need to plan for them in advance. As I said, I have a vacation fund. I've had this fund for, I think, since university. Like, I've had it for a very long time because travel is a huge priority for me. But I also will not go into debt in order to go lay on the beach. Like, that doesn't really make sense to me. So for you all, if you want to travel once this year and you know that the trip is going to cost you $2,500, start saving from now and set tangible goals in order to, tangible steps that you need to take in order to get there. So the last question that you want to ask yourself is, how much money do I want to invest in 2023? So let's say you want to invest $10,000 and you have 26 pay periods throughout the year typically. That is $385 that you need to invest every 2 weeks, which seems pretty reasonable when you break it down like that. But you want to ask yourself, okay, now how am I going to get that money? Say I get paid $2,000 every paycheck and 385 of it can come out, and I'm going to automate that transfer into my investing account. That's great. Now you need to think, which investing account am I going to invest in? So is it going to be my tax-free savings account? Is it going to be my 401k? Is it going to be my RRSP? Is it going to be my IRA? All of the accounts, you have to determine which one makes most sense for you. And lastly, you want to also ask yourself, okay, what am I actually going to purchase? Because the thing that I see very often is people will fund their account, but then they're not actually going to buy anything when they do that. So the last thing you want to do is figure out, okay, I have now invested, I now have the money in my investing account. Now, what am I going to buy? Am I buying stocks? Am I buying bonds? Am I buying crypto? What am I buying with this money? And again, write all of these things down and set a clear plan to achieve the goals that you want to achieve. So that was a lot of information. I hope that it was very helpful for you to help you plan for 2023. 2023 is the year that I want to see us all winning. And next year, I actually have my accountability group that is launching. So if you would like to be a part of it, it's essentially a group where I help you stay accountable to your goals. You can sign up and I'll leave that link in. There are a lot of links I'm going to be leaving, but I'll leave that link in the description box as well so you can sign up. And essentially, I keep you accountable to whatever goal that you have set for the new year. So again, I believe in you. I think you can all do this and we can all win. 2023 will be our year of financial progress, financial success, and all of that. I sound like a preacher right now, but yeah, I really think that we can all achieve our goals if we set our mind to it. And I'm here to help you if you need any help with it. So thank you so much for listening to this episode. I can't wait to see you and get back in your headphones next year in 2023. We're coming back and we have so many amazing guests planned for next year. So I can't wait to speak to you again. Thank you so much for listening, and I will speak to you in the next episode. Bye.